The emergence of Deepseek's AI chatbot fueled this sell-off with NVIDIA and Broadcom and the whole tech ecosystem. And I will say that that is probably the most interesting thing for me because there's a lot of other names that have been moving on AI stuff. We've seen, these utilities. I mean, utilities that I've known for years that all of a sudden, because of connection to nuclear, have been going crazy. Like CEG is one of them. VST is another. So I will say that it was interesting in that the whole ecosystem was kind of affected. There's other names. Eaton, again, these are names that I just know from tickers. I don't even know what they do, right? Like, we've been around forever. We look at names. I forget what they do. ETN, though, is a very well-known name, and there's a big company. They dropped pretty big on this news. I don't know if it's because I don't even know. They do manufacturing. This is the point. And so I thought it was interesting that I located a bunch of other names that I find interesting now, and I'll keep track of as a result of the way the things moved around from this whole ecosystem. It's not just chip stocks. There's some utility names because of energy. There's other energy names. There's other names related to it. So that was probably the most interesting thing to me.
A lot of these back-end stocks like VST and a few others, I mean, VST lost like 50%. It's rebounded real nicely after this move. But, man, some of these stocks option-wise don't have the deepest market. So, I mean, they're almost kind of covered call plays, stock substitution plays. You should know that a risk reversal, like buying the call, selling the put, should only trade a couple of pennies over the natural price of the stock. So if the stock is 100 and you're doing the 100, buying the call, selling the put, you want to do a stock substitution to save some buying power. That should be wrapped around even. Maybe it's 50 cents, $1. That would be your cost to carry it as you don't want that to be $10 or $20. Like, you got to watch these markets. So knowing option strategies, what prices should be, especially if none of these stocks pay dividends, then you could kind of make an intelligent play on a stock substitution if you can't afford to buy stock, 100 shares of stock, that kind of thing.
Good. Well said. Well said. Yeah, good point too. Right, because some of those markets are a little wide.
Yep.
A lot of earnings this week. Of course, the big ones were Meta, Microsoft, Tesla, and Apple. And all of them I felt like were kind of in the inside move. So if you sold some of those, that worked out well for you. Fed, of course, was this week, and they held rates steady. They removed some language about moving toward the progress towards 2% inflation target, which, of course, drove people a little nutty because they're like, is inflation becoming a problem again? Which maybe it is a little bit. A couple of other central banks had meetings this week, and they cut. ECB cut. They're at 2.75. Bank of Canada cut. They're at 3% now. Mind you, we're still at 4.25 to 4.5. So I think there's going to be a lot going on between rates. Obviously, you're still hearing stuff about tariffs, et cetera. I think there's going to be a lot going on with a lot of the currencies. Now, we all know VIX is low, but I thought this was an interesting stat. January's VIX options average daily volume of 983,000 was 13% higher than the average for all of 2024. Again, it's just 1 month, but clearly there was a lot of VIX options trading in January as we come into the new year, new administration, and obviously new problems, new things going on. I shouldn't say problems, just new issues of a lot of different things happening as we start 2025.
Yeah, a lot of those were leaps, Jamal.
A lot of those is what?
Leaps. So what Tom's saying is, you had almost a year of those options to be trading, and after they kind of expire and you roll again, so a lot of those leap options, every quarter you get a big, volume boost in a lot of those stocks.
For January VIX?
Yeah, January VIX is like the, the VIX is pretty much a professional underlying. Retail investors don't really understand and I don't blame them, because as a retail investor, I don't trade the VIX either, because it's so funky the way the prices are, to some future price.
It's a binary event. It's almost a binary.
Yeah, that option. I think what happens in VIX options, Jamal, is that a lot of funds that need some outlier crash protection, they just buy the 1 year, the 1 year VIX options out to January. It just protects them all year, and then they can say, "Hey, we've got some crash protection." That's all it is.
A 20% move or a 10% move to the downside. We've got these VIX options that should explode. Now they might be far out of the money options, but they have them to show on their prospectus.
You're talking about the January that just passed?
That's correct.
Yeah,
So now next, if you go look at volume a year from now, January, you'll notice that volume starts to uptick in there too, and then goes stagnant for a while.
The new rules from OCC and from the SEC regarding how far down they look, in the risk-wise, it's increased from it used to be 8 and 12, and now they've increased it in some cases to 16, 20, or even 40% down. So the way that you get around some of those 40% down moves, just for risk purposes, is go out and buy Jan VIX puts for next year. Then it covers you on the downside risks down 40%.
Gotcha. Yeah. Let's move to the next slide.
It's more of just a capital efficiency thing than anything else.
Stocks, big move in tech names. Was it an overreaction or an opportunity? This is the biggest move we saw since 2020. What do you think?
I think it's an overreaction, but who knows?
Time will tell. I don't think anybody knows anything these days.
Yeah.
Let's move to the next slide. 1 and 2 year yields are at the lowest levels of the year. Again, we haven't seen them. We've seen them kind of markedly come down throughout the month. A lot going on. Of course, on the flip side, 30-year yields are at 7-month highs. And you know what? Let's move to the next slide. This actually puts it even in more context. This is I like this chart. It was from SIBO actually. It's showing VIX TLT versus the Move Index. Move Index incorporates more near-term vol, right? Near-term yields, what's going on with that volatility. TLT, of course, is longer term. So clearly there's a lot more vol in the longer-term bonds than there is in the near term, mostly because of, worries about fiscal policy and where things are going. So there's, a lot going on here in bond land, of course, but there's some worries about where things are going bond-wise. What are you guys thinking?
I rank at 36 in bonds, Tom, sitting right at 114 and a half at the high end of its range, been going sideways. What's your call?
I'm a buyer on a dip. I'm flat here. I'm a buyer on any dip.
And which one?
I mean, I want to sell. I want to sell puts in there. I want to sell them on a dip.
I hear you. All right. UPS crashed on earnings. They're supposed to be reducing the amount of shipping volume they give Amazon by 50%. So this was a crazy move on earnings and not very well received. Wall Street poll shows that 53% of traders feel like the long Mag 7 is the most crowded trade. Not surprising. Long dollar is next at 27%. We got a bunch of big more earnings coming up next week. Amazon, Google, Disney, Uber highlight the list of earnings next week. And then it starts the job stuff. Jolts is on Tuesday. I think ADP is in there as well, some probably on Wednesday. And then you got the non-farm payroll on Friday coming up. Research this week. OJ, Whipsaws Explained, Insights and Strategies for Traders. Check that out. I think I had the wrong date on that. It might have been a different date, but you get it.
I think the craziest thing about this week was you had some mega stocks, the Mega 7, come out with their earnings. Not particularly good. First Move was actually down on these. Microsoft is still down. And yet you had all these fringe stocks, as you mentioned, some of these supplier stocks, whether they be energy or not, all get hit. And the market really didn't go down. I mean, these stocks went down, some of them by 15, 20%, 25, 50%, but yet the rest of the market really held it up. Even the S&Ps went down 100 and change, and we've rebounded from that. Like the rest of the market took it on its back and said, take a breather, you 7, we got this. And even today, you've got Apple higher after going lower after earnings. It seems like nothing can chop the legs off of this market, Tom. I know it seems unreal, but you got to face some facts here. This market is strong.
I forgot to mention something, actually, because we were on here last week. And remember I put up this chart of consumer staples and consumer discretionary, XLP to XLY.
Yeah.
And it was funny because I honestly wasn't even thinking about a trade on that. And right during the show, Chris Vecchio's watching the show. He hits me up. He's like, "You're right. These consumer staples." I was like, "Well, actually, I guess they are." And I got long deltas in some of those names. And so, to your point, Tony, if you look, those are actually the names that held the market up. The consumer
Dow was
staples
up
names.
when the rest of the market was down.
Healthcare and consumer staples actually held the market up. Things like
Russell
Coke,
didn't
things
go
like Pepsi, Mondelez, things like that actually held the market up.
And now these other stocks have rebounded. I don't know, Tom. I don't know what's going to shake this market. It's going to come out of left field. But we had one left field move out of this market. Didn't do anything.